example of the 1 hour candle. So 1 hour candles, like in 15 minutes it can be 4 candles. So this is the first 15 minutes candle, this is the second, third and the fourth candle. Hi friends, welcome back to my YouTube channel. In this video, we are going to see the different types of candlestick patterns. So before understanding the patterns, we will see why we are using candlesticks. So candlestick patterns are the technical trading tools that have been used for centuries in order to understand the price direction. There are more number of candlestick patterns which will helps to understand the price movement in the upside and in the downside direction. Traders supplement candlestick patterns with additional technical indicators to refine their strategy, that is their entry and the exit. Candlesticks are based on current and past price movements and they are not the future indicators. We will understand the two different types of candles in trading. One is bullish candle and the other is the bearish candle. Why the bullish candle is formed or how the bullish candle is formed, we will understand that in detail. Here the bullish candle I have mentioned is green in color. The color, it can be any color, that is blue, it can be blue color, red color. We can go to the settings and we can change the color of the candle. So why this is called as bullish candle means the price opened at low and closed at high. That is how bullish candle is formed. Means more than bears, bulls are having the strength. So we call this candle as bullish candle. Next is the bearish candle. Here the bearish candle is red in color. Why this is red in color and why we call it as bearish candle? Because price opened at high and closed at low. Say for example, price opened at 100 rupees and bears are having more strength. So bulls are weak here. So they push the price down to 50 rupees and price closed at 50 rupees. And this is called as wick. Why this is called as wick means price, the bears try to push the price from 50 to 20 rupees. That is the low of the candle. So this is how bearish candle is formed. So before going to the candlestick patterns, we need to understand how the bullish and the bearish candle is formed. So it will be easy for us to understand and read the charts accordingly. Now we will clearly understand the price action, that is how each candle is formed. Here in this example, I have shown the bullish candle. Here we have the wick on the upside and the downside. So this is the example of the 1 hour candle. So 1 hour candles, like in 15 minutes it can be 4 candles. So this is the first 15 minutes candle, this is the second, third and the fourth candle. See for example, if the price is opened at 100 and closed at 50. So we are having the wick at the upside. So price went till 160 or 170 it can be and closed at 150. So this is the first 15 minutes candle. So when we see the 1 hour candle, we are seeing it in the green candle. It can, in that green candle, there may be lots of price fluctuations. So that is how we have to read the candles. If we see the candle in 1 hour, it will be like green in color. If the candle is bullish, it can be green in color and we can see the wick and the top side and the downside. Next we will see the price action 2. Price action 2 can be price opened at 100 and we can see the wick downside, right? So the price came till 70 and from there bulls tried to push the price up till 150 and closed it. Say for it can be like 120 rupees. Okay, price action 3 means it is like it can be the red candle. Okay, so the price opened at 70 and it went till 100 like that, 100 or 120 or 130. Next is the price opened at 70 rupees and price closed at 150 rupees. Okay, so this is how we have to read the candles. In engulfing patterns, we have two types. First is the bullish engulfing pattern and second is the bearish engulfing pattern. So a bullish engulfing pattern is a candlestick pattern that forms when the small candlestick is followed by the large body candlestick, that is the body of which completely engulfs the body of the previous day candlesticks. Here the bullish candlesticks, that is the previous candle should be red in color and the next candle should be the green in color. The candle which is engulfing should be the green in color. That is, here it is written, the second candle must be bigger and engulf or cover the first candle completely. So this is how bullish engulfing candlestick pattern is formed. That is, the first candle should be red in color and the second candle should be green in color, means that green color candle should engulf completely the red candle, that is a previous candle. In engulfing pattern, we have two types. First is the bullish engulfing pattern and second is the bearish engulfing pattern. Bullish engulfing pattern is a candlestick pattern that forms when a small candlestick is followed by the large candlestick, the body which completely engulfs the previous candlestick. That is called bullish candlestick, bullish engulfing pattern. Here, the first candle must be the bearish, that is red in color, and second candle should be the bullish, that is green in color. The second candle must be bigger and engulf the first candle completely. Like that only bullish engulfing pattern is formed. I will tell you clearly. The first candle that should be red in color and second candle should be the green in color. So the green color candle which completely engulfs the red color candle. So that is how the bullish engulfing pattern is formed. This is the example for the bullish engulfing pattern. Here the price is in the downtrend. So we got the red candle. We are having the red candle here and the red candle is small in size. Then if you look into the green candle, this green candle completely engulfed the red candle, that is a previous candle. So here the bears are weak and bulls are having more strength. So this is the bullish engulfing pattern. So how we can trade using this, that I will explain in the chart. Bearish engulfing pattern. This is the second candlestick pattern. The first candle must be bullish, that is green, and the second candle must be the bearish, that is red. The second candle must be bigger, also it should engulf the previously formed candle. How we will come to know that there will be more bearishness or there is a trend reversal? The bigger the second candle, the higher the bearishness will be. This is how we will come to know that there is a change in the trend. Okay, if the previous candle is engulfed along with the shadow, that means there is a more strength in the bearishness. Also, one more important thing to note here is this pattern should always appear at the end of the uptrend. This is the example for the bearish engulfing pattern. Here, this is the green candle, means the trend is bullish. Immediately after that, we got the red candle. The red candle size is bigger than the green candle and this red candle completely engulfed the green candle. So the strength is more for the bears. Okay, so this is how you have to read the chart, that is read the candlesticks. So how to enter into the trade, long trade and short trade, that I will show in the chart. Till now, we have seen what is bullish and bearish engulfing. Now we will see how to enter into the trade using this pattern. This is Nifty daily time frame chart and here if you see we got a bullish engulfing. Okay, the main thing is we have to note that we got this bullish engulfing at the bottom of the trend. So this is doji and after the doji we got the bullish engulfing candle, green candle. So this is the main thing we have to note, that is we should get this bullish engulfing at the bottom of the trend. And I have clearly explained in my previous video how to enter into the trade if you get a doji candle. So those who haven't seen that video, please go and check that video. So we got a double confirmation here. We got a doji. So if this high is taken away, we can enter into the trade, that is long trade we can enter. So here we got an engulfing candle also. So this is like engulfing candle we got, means the doji candle is completely engulfed by this green candle. So how to enter into the trade, that I will tell you now. So once this high is broken, the green candle's high is broken, one can enter into the long trade. So now you can ask me what will be the stop loss if you enter into the long trade. The stop loss is low of this green candle, right? Now how to trade the bearish engulfing. So till now we have seen the bullish engulfing. This is bearish engulfing, Bank Nifty 1 hour time frame chart. Here we got the bearish engulfing pattern. Okay, that too we got at the top of the trend. From here the price is continuously in the uptrend and at the resistance level we got the bearish engulfing. See, this is the resistance level. So exactly at that level we got the bearish engulfing pattern. So how to enter into the trade? We have to enter into the trade once this low is broken. So again, the stop loss will be the high of this red candle. This is the stop loss. Stop loss is the high and entry is here. Okay. We will see one more example for the bearish engulfing pattern. This is Asian Paints 15 minutes time frame chart. Okay. So here when you see, this is the bearish engulfing candle and we got this bearish engulfing after the doji. And one more thing to notice, we got this bearish engulfing at the top of the trend at the resistance level. The bigger the red candle, the more the bearishness will be. So how to enter into the trade? Once this low is broken, we can enter into the short trade. So if you get this types of pattern, that is doji, and after that if you are getting the bullish or bearish engulfing, that will be more powerful. So I am sure that everyone know how to trade if you get a doji candle. If you are not sure, then you can go and check my previous video. I will put the link in the description box. So doji candle means once this low is broken, you can enter into the short trade. So after the doji, we got the bearish engulfing pattern also. So we got the double confirmation for us to enter into the short trade. So we got this pattern at the resistance level. So we got three confirmation. One is the resistance level, we got this pattern, and after that doji candle and bearish engulfing. Hope this video is useful to you. Please don't forget to like, share and subscribe. Click the bell icon too for my upcoming video notifications. Thank you for watching.